Good morning. It is Monday morning, December 1st. I'm Zach Howard coming from you today from Newfoundland, 9:30 Eastern Standard Time. I am here to start the last month of 2025. Should be another exciting month as 2025 has been. Checking in to start the week on my notebook as it looks through global macro, bullish, bearish trends across various asset class through the Dragonfly Capital branding of this portfolio that I've come up with. How it looks at all different asset classes through all different market scenarios and adjusts accordingly thereof. Not just set in stone in one particular asset class. This is what this Dragonfly portfolio gives us. We're looking at basically a reversal in trend changes we had seen the previous week. The S&P 500 remains bullish trend, no change there, but the small cap Russell and the Nasdaq, both higher beta indexes, move back to bullish trend here on a slower U.S. equity market week with the holiday. Trading volume in the U.S. was roughly down 43% week over week last week. So not reading too much into this shorter term trend change, which has to do with volatility selling coming back to America with the VIX now going back to bearish trend in that lower 16 to 17 range. Then we look down here under both the Nasdaq and the Russell Small Cap Index. Their volatility regimes also reversed lower, 6 points lower in the RVX and 8 points lower in the VIX volatility. Both kind of putting a bid into those two equity indexes. Can they hold that here today, though, where it looks like U.S. equity market is going to open up lower? However, in a global macro standpoint, not just looking at equities, looking at credit, looking at more important instruments that may give us, I guess, readings of where the market is going to go. The high yield space fell last week 42 basis points on that OAS spread, 269. Not exactly getting beared up if we look at that dynamic there. Move index, the treasury volatility also down 11 basis points week over week. The strongest signals in my notebook to start the week here. Silver had a massive week. We'll talk about that here shortly. It's number one in the playbook. Natural gas has been hot for a while and continues to show higher lows, higher highs. Sorry. Number two, copper. Number three, gold and miners. 4 and 5 to round out. And where we're looking at it, the allocations in the portfolio, just 20% allocation of that fictional 100,000 now in the alpha thickener zone, and we have mostly exposure to true commodities. My favorite gold miner, which is giving you higher alpha outside of the lower beta in gold. Avex Technologies has been on fire. We got that as I guess, more a systematic technology theme to this bucket, but the primarily holdings of Dragonfly Capital here now into December to end the year, where I think it's going to be cautious, is still gold and risk off instruments that are reverse to beta, which is the short of the yield space, a high yield space, short of Cathie Wood, short of Car Company, and short of the Russell for now. Not a great week last week for that, but let's see what happens. And then we got 20% exposure to our yield plays inside the commodity space with adding Brazil. Really like Brazil here for the next couple months, next couple quarters inside the backdrop of stagflation and higher commodity prices. Starting off with Japan, massive move higher here in the Japanese 10-year bond yield. This has been building for some time, but looking back on the 5-year, it was negative 0% rates back 4 or 5 years ago. Now up to 188, 1.87% on that 10-year yield. So bond yields work inversely. With yields rising, the value of that bond falls. And if you were a buyer of Japanese government debt 10-year back in 4 or 5 years ago, you had to do mark-to-market losses on those positions. Now you're sitting on a massive loss on the underlying Japanese yen government bond. So going to see what happens there. I think the Bank of Japan intervenes and steps in. The currency, the yen, US dollar cross, kind of shuckling around here at 155. Biggest story last week, the end of week, the CME. They pulled the old outage storyline on silver. So silver in a illiquid trading environment put limit up when the CME said, sorry, we have to close the market because we have a data issue in our data center with a cooling issue. In 2025, a cooling issue? IT experts call BS on this, and it seems to be that there's a massive short positioning in the silver market that is getting eroded now with physical demand and that CME delivery of those contracts, and the silver is just not there. The paper market is being broken by physical demand, which is always the case. And silver looks like it's got a date, $58, $59, $60 an ounce US coming here this week. They're going to play some more games in that silver market. But we're at all-time highs in silver. Silver is rocketing higher, up 14.5% last week, up 100% this year. The trade of the year is silver. No one really talking about it. It is a poor man's gold. In times of debasement of currencies, it acts like a precious metal, but it also has commodity, industrial metal properties. But really, it's a story of both silver and gold. Physical demand, particularly in the Eastern world, want that delivery, and the paper contracts are getting broken. It's going to be interesting. Bitcoin opens the week down, big gap down lower. It's down over 6.5% earlier this morning, now back up to 86,000. Still a bearish trend to me, especially on the short term chart. Potentially back to 80,000. It could go there this week if we get an increase in volatility in other beta names. Strategy out pre-market. Ew, it looks ugly here, down 7%. 164 new 52-week low, and the Bitcoin to gold ratio now the lowest has been since 2023 at 20. Just you need 20 gold ounces to buy one Bitcoin. The chart doesn't lie. That's just the reality. Strategy's out saying they parked away 1.4 billion in fiat money to pay their dividends and their interest servicing on their convertible debt for the next 12 to 18 months. Arguably a very prudent CFO decision to keep that company going. But what does that do for potentially inhibiting the bid on buying more Bitcoin here at the round number of 650,000 Bitcoin the company owns? I don't know. It's a big buyer out of the market here. That's going to be a question if they can't continue to raise. Last week they sold this common shares to raise that liquidity to meet their obligations on the senior secured. But that's the reality. It's just the bearish trend, and it looks like it could be further vulnerable here today. GMR, or global PMIs out today. ISM in the US. We got central bankers speak. I think we get going again with some more volatility here in the next couple of days. Bitcoin volatility 53. Nasdaq volatility opens lower. And keeping an eye on NVIDIA. If the market is going to go hard in the year, it's going to need more than Google. And NVIDIA, the biggest company in the world, is still in bearish trend and is teetering on trend support. It breaks down here, 174, 175. It could get ugly. That's what I got for you today. I'll see you later on the end of the week, perhaps. Cheers.